Well, following it with actually another question, really, because you mentioned about seed legals and about the UK. Now, a lot of our audience are also based in the US. How does this relate to the US, and what sort of support can founders get in the US for legal structures, whether it's through seed legals or any partners that you deal with?
So there is no seed legals in the US at the moment. The good news is there will be a seed legals in the US before the end of the year. So if you are looking to set up, please drop me a note on LinkedIn, and I'd love to see how we can help. But in the meantime, there are companies like Clarkey and others that will do some of those. I think F6S has got some founder agreements. Some of these are kind of like templates. You have to work things out yourself. Our model is that we'll take you through all the things that you need to think about, and we'll give you data to show what's market standard, and then we'll build the agreements. Failing that, you'll need to look at other solutions. The US also has some complexity because it depends which state you're in and so on. One of the other interesting things in the US, and I don't profess to be an expert on the US, but of course you have to pick a state that you're going to incorporate in, and you need to pick a company type. So in the UK, literally 100% of investable companies are LTD or limited companies. You can create a CIC, a community interest company, but those are mostly charities. So essentially, your choice is very simple. I'm going to create an LTD company. If you're in the US, your first choice is, am I going to incorporate in Delaware or somewhere else? Delaware is the standard for VC investable companies. Most VCs will only invest if you're a Delaware company because that's what they understand. So if you're an Etsy trader and you're just looking to create some trading company, great. If you live in Wyoming, do Wyoming. Or you can shop around and find a state that's inexpensive or, has great taxes or whatever. But if you want to be a VC investable company, Delaware is the way to go. And the other thing to know is, should you be a C corporation, like an Inc., or an LLC? And many founders don't understand that and get that wrong. So essentially, an LLC is what's called a pass-through tax structure. So you're taxed, any revenue made by the company essentially flows through to the shareholders in the company, whereas a C corporation is the taxes are paid by the company, and then it pays its employees and so on separately, kind of like a UK limited company. So LLCs are great if you're a sole trader and you're a contractor doing work and you want to put it through a company. It gives you legal liability shielding through the company, but isn't really useful for companies raising investment. And the last thing to know is, in the US, there's something called QSBS, which is a tax saving for investors. So investors will pay no capital gains tax, no federal capital gains tax, if they keep their shares for 5 years. But it only works if you've got a C corporation. So basically, if you're planning to be an equity fueled growth startup, Delaware C corporation is the answer.
Well, that actually answers a couple of questions.